I've been asked for a market update, so that's what I'm going to give you. All right, let's give this a go. I'm going to go through some numbers real quick, and hopefully I can make them all make sense as we go along. Currently, our inventory is 3,500 homes for sale, just over 3,500. A little over a year ago, we had under 3,000. So we've gained about 500 listings compared to a year ago. That's quite a bit. But is it? So right now, single family make up 2,600 of those 3,500. And townhomes, condos make up 700 of them. So we have a lot more single family homes than we do condos and townhomes, and that's going to be pretty consistent. So right now, new construction makes up 37% of our single family residential inventory. In townhomes, new townhomes make up 47% of our inventory. That's because people don't want to get rid of the townhomes right now. Townhomes were affordable. They got a great rate. They're going to stay there as long as they possibly can until rates come down. So the only townhomes that we really have are new construction. That's why we have 37% of our townhome inventory higher than our single family residential inventory. Our total inventory is 3,500. 37% of our total inventory is new construction. Now, that matters because it was about 6 months ago to a year ago, 58% of our inventory was new construction. And that was drastically too high. That meant we had way too much new construction and way too little single family residential. Well, that has started to shift. That's good news for builders. But what does it really mean? To me, that means there's not as many builders putting holes in the ground. To me, that means that we have less new construction inventory overall. Therefore, it doesn't make up as much as our total inventory. That is a little concerning if the market turns around. If we look at our pending homes, I consider a pending deal that's probably going to close between 30 and 60 days out. So that's about a 1 to 2 month supply. If I take the total number of single family and townhomes and acreages, the total number of listings that are currently pending, that equals about 1,840. Our total number of listings is 3,520. So we have around a 2 month, maybe 2.5 month supply of homes if we consider what it's going to take to get pending to take over the current market. So if we had no more new listings come to the market, we're looking at about a 2 month, 3 month supply, and our inventory is going to be completely gone. Back when I started in 2004, all the way up to about 2018, a 6 month supply of homes is what we considered a balanced market. During the pandemic and the craziness, they changed the rules on us, and some people started saying 3 month supply is a balanced market. Right now, if we take those pendings and we look at the total pendings versus the total listings, we have about a 2.5 month supply of homes. Not nearly enough. Back in 2006, we also had 6,000 homes on the market. That's a lot. We had 710 townhomes and condos in Ankeny alone. The total number, it's funny, the total number of townhomes and condos all across the metro is 710. So you can see where I'm going with this. We had a lot of condos and townhomes back then, and today we struggle with that. And that really should be the thing we should have the most of because it's so difficult to buy a home today, and townhomes and condos can be more affordable. With the rates at 7%, it's a struggle. We all know it's a struggle. There are a lot of changes going on in the real estate world, not only with realtors, but also with buyers. The rates, everything's kind of crazy right now, making it extremely difficult for first-time home buyers to buy a home, especially considering the prices. Will prices come down? Well, as I said, we are very low on inventory. If we're low on inventory, prices aren't going to drop. Buyers have been sitting out there in the wings waiting for rates to drop. We have so many people right now that want to purchase a home that are just kind of sitting on the sidelines because rates are just too high right now. Prices are too high. They can't afford it today. Therefore, once they can, if rates do drop, which I anticipate in the next 6 months seeing a pretty decent rate drop, those buyers are going to come back to the market and they're going to gobble up the inventory. One positive to that, if we can get rates down to in the fives, I doubt we'll see below 5, but let's just say we do, there's a lot of people that want to move up, which will create inventory for us. Buyers that own those townhomes that are finally wanting to move, now they can afford to move, those resale townhomes will come on the market and add to our inventory. But I think we have so many buyers that are sitting out there waiting that the listings will not keep up with the number of buyers. which will then also cause price raises. We're going to see prices of homes going up. Real estate is a good investment. Historically, the prices have always gone up. During recessions, historically, houses do very, very well. This last recession in 2006 was due to the housing bubble crashing. That is a different story. But as far as I know, real estate has always been a good investment. Even if you bought a home in 2006 or 2008 or 2010, you're sitting really pretty if you still own that home today with a lot of equity. The idea of foreclosures, the idea of you might hear waves in the news about foreclosures going up. They are not. We are still very low on foreclosures. As a matter of fact, if you would like me to do a market analysis for you so you can see what kind of equity you have in your home, just make sure you comment. You can send me an email. All my information's out there. But the number of people out there today that own their home free and clear is at record levels. The amount of equity that people have in their homes is at record levels because we saw such an increase from 2020 to today. So the idea of someone not being able to sell their home and get out from underneath the house if they can't afford the payment anymore is it's out the window because most people have enough equity to take care of that. So that's a great thing. I think that means that most homeowners are pretty darn safe. So we probably won't see the foreclosures that you might think if there is a recession or if there is a problem in the future. Now, we've been watching the jobs reports, inflation, all this stuff is starting to come to a head. The Feds are looking to do some rate cuts here in the next few months, which is going to be very positive for us as far as interest rates go. Like I said, there's a lot of buyers sitting out there waiting. Once this happens, you're going to see buyer activity pick up dramatically. It may not happen until the first of the year, and it might happen, say, maybe November 6th. It happened in 2016, in 2020. The minute the election's over, the buyers get back out and start making moves. So we'll see a definite buyer pickup. Whether rates go down or not, we're going to see buyer pickup after the election for sure. But if rates drop, it's going to be very dramatic, and it's going to be a lot of buyers hitting the streets. I can almost guarantee it that. So right now, what we're seeing is a lot of new construction under 500,000. That's where the majority of the new construction inventory sits. That's where the most competition is. You get above 500,000, you see less new construction inventory out there. Builders are not willing to put holes in the ground quite as much as they had been in the past. They're a little nervous about what's going on, and a little tight with their wallets, especially if they built back in 2006, 7, and 8. They don't want to get hit with what they got hit with back then. Now, could that possibly happen again? The amount of land that's been developed, the lots that are available, is dramatically lower than it was in 2006 and 7. In 2006 and 7, when the banks took back development ground, they sold lots for cheaper. So if there was a house in a development, like let's say Cherry Glen in Ankeny, builders had a house under construction. They bought that lot for $50,000. All of a sudden, all the lots go back to the bank. They sell those lots for $30,000. Someone builds that exact same house that was under construction when the crash happened. The next builder can build that same exact house for $20,000 to $30,000 less. So those builders that had holes in the ground, had homes going up, when those lots got reduced so much in price, they got their butts handed to them, and it just wasn't fair. So builders today remember that because it's still in our memory. It was a little over a decade ago. They don't want to get caught in that same situation. So we're probably not going to see builders getting hurt as bad as they did back then if this buyer activity doesn't pick up. If it does pick up, the builders that are taking that risk and putting holes in the ground and building a lot of homes, they're going to win. Right now, you look at the builders currently in our market doing that, the national builder, D.R. Horton, they're full steam ahead because they're able to. They can handle a financial hit, but they are also going to probably end up on the winning side of this deal because they own the most lots and they got the most money and they got the most houses in the ground. So they're definitely going to see some good response if we see this rate drop coming up here later on this year and early into 2025. Our real estate market is healthy. It's very healthy. I had a question asked to me just the other day, how long will it take to sell a home? And I said, well, if we price it right, you could see multiple offers. If we price it too high, we might have to do some price reductions and you may not net as much money. They said, well, that doesn't really happen in Iowa, does it? Because they were out of state. I said, absolutely, it does. A team member of mine wrote an offer for well over list price and didn't get it. I've had multiple offers on houses in the last 6 months or last 6 weeks. So I know that it is still happening if you price a home correctly from the start. You can't overprice homes like you could in 21 and 22 and still get offers. Another thing I will touch on real quick, because I think this is super important, then I'll let you go until the next update. Buyers today, and if you've worked with me, I've probably told you this, buyers today are not willing to write offers on a home unless they can see themselves paying close to full price. The minute you write an offer, you become emotionally attached to that property. And in today's world, most people don't want to get emotionally attached to something that they may not get. So the adage of, well, just write a lowball offer and just see, you don't hear that too often anymore. Someone's not writing an offer unless they're willing to pay for it and buy the home. So that's why it's essential to price the home properly. If you're priced too high, they don't want to, let's say you've got a home priced at 450,000, but you'll take 420. Buyers today aren't writing an offer for 420. Very, very few buyers out there do that. And if they do, you counter back and they end up coming up to a more reasonable number. But I say reasonable, I mean within 5% of the list price. So that's kind of what we're looking at today. Make sure you price your home correctly from the start. You will get more money in your pocket. But that's what I got. I'll give you another update probably in another 2 weeks, month. You tell me, how often do you want me to do these? Thanks for watching. If you need anything at all my information's below. Contact me and I would love to help you.